Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, it's Fed Day, right? Federal Reserve, they're going to come out and they're going to do absolutely nothing, right? Not going to raise rates, not going to lower rates, just keep them the same, right? But here's the thing. Now, when the Federal Reserve comes out, that week is usually a week where the stock market changes direction or shortly after. So either this week or next week, I'm expecting the market to top out and come back in. That's my take. Yes, we're in this crack up boom. A lot of people think the crack up boom is going to continue forever and we're going to end up on the moon with all the moon boys. And that's a possibility, I suppose. But I think we're getting close to where we're going to top out. I'd be very cautious here because I think either this week or next week will mark the top of the market and then we'll start to come back in. We'll see how that plays out. That's just my take. All right, so let's get over to the real estate stuff. Real estate stuff's always exciting, right? All right, so here was the headline. Is the housing market going to crash? Is the housing market going to crash? You know what the experts think? It's never going to crash. They'll tell you. That's what the article says. Impossible, Tall Mike. It's not going to crash. We have too much demand out there. Doesn't matter how high prices go. That demand's going to come in. It's going to buy all these houses. Now, when have you ever found a real estate expert that says the housing market's going to go down? I've never seen it. Right? I'm not a real estate expert. I'm just a dumb broker guy, right? I sell houses. I make money on it. It's been my livelihood most of my life. But am I an expert? I don't look at myself as that. Do I have a little common sense? Absolutely, I have a little common sense. Now, I know my viewpoint isn't popular. Believe me. There's very few people that think the market's going to come in, right? They think it's just going to continue on. Now, a lot of people are not calling for the crash. Experts say no crash, right? Now, I'm not calling for a crash. I'm calling for a 40% correction. Now, why is that? See, I'm just saying we're going to revert back to the long-term moving average. We always revert to the mean, if you will, in the housing market. Every time throughout the course of history, the housing market always reverts to the mean. It reverts back to the long-term moving average. Now, sometimes it overshoots to the downside, right? Now, Harry Dent, he thinks we're going to overshoot to the downside and keep going lower. I'm just calling for a 40% pullback, and time again, everybody tells me, but Mike, that's impossible. Houses don't go down. Well, actually, they do. Went down, the Great Depression went down, right? 2008 went down 34%. Great Depression, 26%. This one going to drop about 40%. I wouldn't be surprised if you see them half off soon. That's just my take, but this is never going to have a crash. Just ask the people in Florida. Their crash is already starting. Ask the people in Texas. Their crash is already starting. The crash is going to be coming to your area. I know that's not possible, but it's going to happen. That's just what's going on in the market. The market is boiled up. Crack up boom, if you will. Crack up boom in the housing market. Crack up boom in the stock market. This crack up boom's coming to an end. Okay, now here's a little bit what I want to talk about. All right, so you got trueflation, right? Okay, inflation, there's a website called Trueflation. But if you look at the real price of houses in the last couple of years, they've been dropping in real terms, not in nominal terms. Nominal terms, they've been pretty flat, just going along right here up at the top. But in real terms, they've been coming down. Now, what's real terms mean? Well, you got to take into account inflation, your purchasing power. If it stays the same, and inflation's running 10%, well, then you're losing 10% a year. And you do that for 2, 3, 4, 5 years, you're down 50% in terms of purchasing power. In real terms, not in nominal terms. Nominal terms, they may be able to keep them here. Nominal terms, they want to see them go up. Why? Why they want them to go up? So they can tax you. So they can tax you more money. But here's the thing. All right, you go on Trueflation and they'll tell you since January 1st of 2020, money until now. In other words, the last 4 years, you have lost 25% of your purchasing power. The dollar bill has lost 25% in just 4 years, and it's not over yet. Now, this is the biggest tax that the U.S. government has ever placed upon us. Now, I know that administration that's in there now say they're only taxing people that make over $400,000. Well, maybe you make over $400,000, but those are really the ones that are wealthy. Those are the ones that have the assets. Those are the ones that are not hurt by inflation. Why are they not hurt by inflation? Because their assets went up 25, 30, 40% higher, right? So they can handle the inflation. Now, the bottom people, the bottom 90%, their assets didn't make up for where they're losing money. 25% of every dollar they make is gone. 25% of every dollar they spend, gone. 25% of every dollar they have saved, wiped out. They're wiping out your purchasing power. Now, I got proof of this. I mean, we're hyperinflating in California. But Mike, California is not hyperinflating. Well, technically it is. You look at the fast food industry, and since we put in that $20 minimum wage, the fast food industry is hyperinflating. Now, I went to get a piece of pizza. I like pizza. I bought a slice of pizza. I do that every now and then. The slice of pizza was $10. $10 for the slice of pizza. Now, that wasn't so much the shocking part. I was there 2 months ago, and it was $8. $8 then, $10 now. I asked why, and they said because the minimum wage. We got to pay all the employees. There's a minimum wage law on the books right now to make it $50 an hour. That means my slice of pizza is going to be at least $25, maybe $30. I was telling this to a friend. He lives up in Olympia, Washington. He said he was shocked. He was downtown Olympia, and they were running a lunch special of the day, meaning it's a bargain price, right? Anyways, you could get a slice of pizza and a salad for only $16.95, $17, right? I said, well, that's a bargain. The salad then, only $7. You got to hurry up. Was it busy? Said not a soul in there. People can't afford this stuff. I mean, but really, slice of pizza, $10? That was just $8 2 months ago, and every fast food place is like that. I mean, you go to Wendy's, you go to McDonald's, I don't care where you go. People are just complaining about the prices. But here's the thing. They've already laid off 10,000 people are out of work because they raised the minimum wage to $20 an hour, right? Everybody said, hey, that's great. We want everybody to make $20 an hour. Well, these people are getting laid off. Now, when you're working at fast food, I don't mean to knock fast food people. People are trying to get in there, but it should not be a career choice. But here's the thing. It's kind of the bottom of the rung, right? Where do you go when you get fired from the fast food places? Now, I used to have video stores, and I'd hire the people that got fired from the fast food place. And believe me, these people, they were challenged. They were very challenged. Anyways, it's just I got carried away there. But here's the thing. So Trueflation says we've wiped out 25% of our purchasing power already. You see, hyperinflation, what is it? 50% a year I'm going to go with. Some say it's 50% a month. All right. So now is this next depression going to be a hyperinflation depression? Or is it going to be a deflationary depression? Now, I was listening to an economist the other day on his podcast, and he was telling me we're going to have this deflation. Now, he was explaining to me that we cannot continue at the pace we're doing. We're spending too much money, and eventually every dollar that comes in will go to pay the interest rate. And his philosophy was, well, if that happens, of course the government's going to do the right thing and stop spending, because then it's obvious to them. You see, we got a lot of mentally challenged people in the government. They can't see the writing on the wall. Tall Mike, he can see the writing on the wall, but these people in government, they think they can just keep spending money. But his philosophy was, once we get to where every dollar coming in goes to just pay the interest, that we're going to stop printing money. Not a chance. How are we going to run the government? They're going to print more money, more money, more money. I think we're going into a hyperinflationary depression. That's my take. That's the direction I think we're headed. He thinks we're going into deflation because magically the government's going to become fiscally responsible. Now, I agree with them. That would be the right thing to do. Matter of fact, I even think they should pass a law to make that the right thing to do. What should the law say, Tall Mike? Well, it should basically say, well, if you don't balance the budget, if you go over the budget of the, that we have, then you should not be allowed to run for re-election. The whole Congress, kick them all out. If they can't balance the budget and not spend $1 more than we take in, kick them all out. Make them ineligible to run for re-election and get a new group in there that has some fiscally responsibility. That's just my take. I know that's never going to happen. I get that. But are we going to deflation or hyperinflation? I'm leaning towards hyperinflation. They're not going to stop printing money. Government's not going to stop spending money. This thing's already taken off. We're headed to the moon. That's where the moon boys are. They live up there, up in the rarefied air. That's where we are with this debt, 35 trillion, almost 36, I guess. I don't know. Keeps going up. Look, we print another $1 trillion every 90 days. Every 90 days. I guess it's every 100 days. I don't want to exaggerate. I think they say every 100 days we go another $1 trillion into debt. This is not sustainable. Now, his take was that the government is going to become responsible. They're going to all of a sudden stop spending. No, I don't see it that way. Here's what I see. I see the government pushing us into war. We already pay for 2 wars. I think we're going to be paying for 3 soon, and they might push us into a hot war. What happens when you go to war? Well, you need to print more money, right? You need to fund the war. You don't want to be in the dollar when we're going to war. You don't want to be in it. You want to get rid of your dollars. You want to put them into real money. That's what I'm doing. You can put it into Bitcoin. I don't put it into Bitcoin. I put it into gold and silver. I think they're on sale. I think they're cheap. I know it's hard to buy gold up here. It's almost at a record high, but it's going much higher. Why? Why is it going higher, Tall Mike? Because we're going to keep printing the money. That's why. Anyway, so I think we're going to go with hyperinflation. And now Powell, he knows that we need inflation. He's got this debt. He's got to inflate that away. He knows we need inflation. Now, here's what else he knows. He knows right now we have negative real rates, okay? Not the nominal rate. They'll tell you that are 4.5%, 5%. Let's call it 5%. Okay, that's the nominal rate of interest. But you got to subtract the rate of inflation. But Mike, inflation's only 3.4%. That means we have a real rate of 1.6%. And those are their numbers. And those numbers are wrong. I'm here to tell you, yes, they give you 5% on the bond. I agree with that. They're paying 5% on whatever, the 10-year, the 2-year, 5%, right? But inflation is not at 3.4%. Inflation's still up here 10, 12%. So you take that 5% and you subtract 12%. You got a negative real rate of interest, a real interest rate, a negative real interest rate, right? A negative 7%. Okay, and Jerome knows this. He's not an idiot. I mean, he looks like an idiot sometimes. He does stupid stuff. He doesn't have the common sense, but he's really not an idiot. He knows what he's doing. He's inflating so he can get rid of the debt. But we're running a negative 5, negative 7%, somewhere around there for a real interest rate, right? Well, I'm telling you, for me, that's just a green light for gold. Gold is just going to shoot up as long as they keep doing this. Look they tell you the economy's doing great. Okay, maybe it is. In their eyes it is. In my eyes it's really not, right? Okay, credit cards are at an all-time record high. I guess that's good. That increased the debt so they can go out and spend. You know what's at an all-time record low? Savings. Savings is at an all-time record low. Credit cards at an all-time record high. People are spending, but it's a debt-based society. It's not a wealth-based society. Look at bankruptcies. Bankruptcies have spiked up 40% this year, 40% over last year. Bankruptcies are going to the moon. People cannot afford to live. This is not going to end well. They're going to push us in the direction of war, which is going to be more money printing, which is going to reduce your purchasing power by even more. Look at, Biden, he's already got his tax plan out. He wants to, 45% on capital gains? He's already taxed us 25% just in inflation, just in the loss of purchasing power. And that little bit of purchasing power you got left, he wants to take it with a 45% capital gains tax. This is insanity. Look at, I don't know, man. When we moved to the United States, we revolted against King George or whoever. He was only charging 25%, but Biden, he got this plan to go for 45%. Maybe we'll have that revolt after all. That's just my take. We'll see how it all plays out. If you like this stuff, give me the thumbs up. Why not, everybody? Get out there. But before you do, punch that subscribe button. Enjoy your day. We'll talk again real soon. Bye-bye now.